From Daily Forex, this is Chris taking a look at the US dollar against the Swiss franc. The US dollar has rallied a bit after initially pulling back just a touch against the Swiss franc during Thursday trading. All things being equal, this is a market that I think is trying to do everything it can to break to the upside. And the hammer from the previous session on Wednesday could be a big factor. If we do break higher, the 0.84 level becomes an area of interest that I think makes a nice target, especially now that the 50-day EMA sits just above there. Ultimately, I do think this is a situation where we get there eventually, especially if interest rates continue to favor the US dollar, which they will probably for the rest of our lives, the way the Swiss hold their interest rates down. But there have been some concerns about the bond market in America, and that, of course, makes people run from U.S. assets. So do be aware of that. Ultimately, this is a scenario where if we can break above that 50-day EMA, then it's likely that we go looking to the 0.86 level. Underneath current trading, the 0.82 level should be support, right along with the 0.81 level, which, of course, had already proven itself to be important. This is a market that will move on the latest risk sentiment, as the Swiss franc is considered to be the ultimate safety currency, and of course attracts a lot of attention when people are freaking out. So that being said, you do have to be careful with the idea of shorting the Swiss franc in such a volatile environment, but given enough time, this is a market that will try to find its bottom, and that bottom could be somewhere in this particular area.